So, good morning, ladies and gentlemen. First of all, a warm welcome to all of you to have joined us at 11 o'clock. I know it's a busy day for all of us. But having said that, folks in Zoho Books have decided that this is also a very important topic that will be required for your year end closure, proper or smooth and seamless year end closure for your accounts. With us, we have C. Anvesh Shetty. C. Anvesh Shetty needs no much introduction, but yet I would like to introduce him because for the benefit of few of the people. So C. Anvesh Shetty is a chartered accountant by profession and a tech enthusiast by passion with over 8 years of experience. He specializes in teaching taxation, accounting, and information technology. He is known for his engaging teaching style and has contributed to various educational platforms. In addition to his teaching endeavors, C. Anvesh Shetty provides tax counseling services, assisting clients with tax filings, managing tax notices, and handling scrutiny cases. So rest assured, we are in very good hands where he will be covering on what and how you and what processes you can follow when it comes to closure of accounts. So without much ado, C. Anvesh, it's the platform is all yours. Thank you so much, everyone.
Thank you so much, Harsh. Yes. And we are joined by Narayanan sir also. Welcome to you, sir.
Very good morning, Anvesh.
Yes.
Very nice to see you on the screen. We are together after a long gap. So I still remember we have a conversation on, doing some webinar for the benefit of all the business owners and accountant fraternity about how to do this year-end closing. That thought came to our mind, and then we decided, okay, we have to do this. So I'm not taking much of time because I leave the questions to the audience or the attendees. But before that, I would like to start off with a couple of questions to you. And one is that, see, I am also a commerce graduate. So when it comes to account reconciliation or year-end closing, I have witnessed in my entire career that the finance team or accountant team, they are always stressed out post year end, the 31st March, and they are all stressed out. There could be varied reasons. Like one is that the right software is not with them, or I'm not. I would like to call it a tool, the right kind of process. So these are all basically, or even the knowledge, sufficient knowledge for that matter, that also plays a major role. So basically, my understanding is it's very simple to put it across. It is reviewing, reconciling, and adjusting entries, and verifying that the transactions recorded in the past financial year are rightly done. So that is what basic understanding one should have about the financial year and closing. Those days, it was all manually done, wherein you keep calculator with you and the sleepless nights. You sit on multiple files and folders and spend time on it and do. Now there are a lot of tools available here. My first question to you is, having said that, there are numerous software, plenty of softwares available in the market. There are still, I understand that what I see is many accountants or business owners have not very clearly understood how this software is different from each other. They are used to some legacy softwares, and all these legacy softwares they continue to use. But when it comes to newer software, the expectation from them by them is that they expect everything to be in the same way how it used to be in the legacy software that you use. So what is your view? What according to you is the right solution to make them understand that that is not the way, and the software behaviors are completely different from the legacy software? I am not pointing about one specific software which is in competition to the legacy software, but I am saying overall perspective. As I was stating earlier, numerous softwares are available, and how do you advise that how it should be done?
Yes. Thank you, KP sir, for that apt question to start with. Now, there is no good or bad software or good or bad way of accounting. Like every software, every system, even if we go back to the legacy system of accounting, where we had everything on the basis of ledgers, registers, even those were the perfect system of accounting. Only the drawback was it was taking a lot of time, and there was scope for a lot of arithmetical errors at the olden days. So back then, the finalization of books was largely to do with seeing that every register tallies. At the end of the day, balance sheet had to tally. Now, even when we were a commerce student, and the initial exercise was just to see that the trial balance tallies and the balance sheet tallies. But now the time has gone that we are not really concerned about balance sheet being tallying, because the software ensures that double entry is there. So irrespective of whichever the software that you use, it sees to it that the balance is always equal. So now we have to look one step ahead. Now when we take a flight, we, as a passengers, we need not know the aerodynamics, we need not know the science behind what makes an aeroplane fly. But that is when you're a passenger in an aeroplane. But when you're talking about accounting, as an accountant, you are the pilot. And when you're sitting in the cockpit, you cannot say that I don't understand what is happening in the software. Now there is a lot of difference between driving a car and driving a plane, and we are not saying which is better, but there is a difference between these two systems, and you need to understand the engine behind the same. I'll give one very simple example, because I want this session to be specific to that of Zoho Books, so that all the participants here have something to take home. Now, one example is how accounting is slightly different in Zoho Books compared to that of other software. Now, let us say as a professional, I bill my client 1 lakh rupees. Now let us say that client does not pay me entire 1 lakh rupees. He withholds 10,000 rupees as TDS, and he just credits 90,000 rupees to my bank account. So normally, if I were to use a manual accounting software, manual system of writing, I would simply write bank account debited 90,000, because that is what has come to my bank account. Then I will write TDS is 10,000 rupees. That is what will sit in my current assets. Then I will say to account receivable, my debtor has paid that amount. So this was a very simple entry, nothing complicated about it at all. But now when I look into how the Zoho Books records this particular transaction, there are two tranches, there are two parts to this particular entry. The first part records that entire 1 lakh rupees has been received by me, and my customer has paid that 1 lakh rupees. But in reality, again, I'm reminding you, I've not received 1 lakh rupees. I've received only 90,000. And the second part of the entry is it shows as if I have paid that 10,000 rupees as TDS to the government. See, the end result is going to be the same, that recording only 90,000 has come in. That is old system. And in Zoho, what it records is 1 lakh has come in and 10,000 has gone out. Now you need to have this understanding of the tool that you're using, or else you will be spending sleepless nights in figuring out, comparing with your passbook. Because when you look at your passbook, there is only 90,000 rupees that has come in. Now you are surprised as to where is this 1 lakh rupees, where is this 10,000 rupees going out. And then people quickly jump into conclusions saying that, hey, there is something wrong in the software. No. It is just that the way that certain things are recorded is slightly different. That's it. So this session, what I'm intending is to tell that how Zoho Books records the nuances of using Zoho Books, which is slightly different from other softwares. So a request to all the accountants, because even I come from, initially using Excel, then to that of Tally and other softwares, then coming to Zoho Books. So initially when you use, at least at the time of finalization, it is way too quick. We jump into the conclusion and say that something is wrong with the software. Trust me, no software is perfect, but Zoho Books 98-99% it solves your issues. 1% here and there, depending on your industry, you may not get the solution that you want, but there is always a workaround for the same. And I will be happy to answer all the questions that you have at the end of the session. Yes, KP sir.
Questions which have come.
No, as of now.
Can you just check on that?
No.
Okay. See, Anvesh, again, one more thing. When we talk about, I am from a software company, so we talk about real-time reports and all those things. It's all readily available. Just click of a button, you have your balance sheet and any report that you want. In our software itself, there are about 70 plus reports. So, is it possible, as a layman, I am asking you, if a layman has to ask you, that is it possible that this reconciliation can also be done on a daily basis? Or can you say that if you keep on doing this on a daily basis, then the year-end stress may not be there. Maybe you will complete 90-95% of your work, and then only 5% is left, which is tallying the accounts. Is that true, or you will say no, that has to happen only after the financial year closing?
No, that is a very good way of putting it. As to this is like asking a student that is it is it good that you revise on the daily basis, and then it is, exams are going to be easier rather than studying at the very end. But the harsh reality is it is slightly different from studying for an examination, because as a businessman we normally rely on the third parties. Now when I say my balance sheet, it is not about me talking to myself. It is my financial position, which has to be accepted by others as well. For example, if I'm dealing with my customers, if I'm dealing with my vendors, I cannot have a balance in my books that is different from their balance, my balance in their books. So this reconciliation can only happen, it cannot happen on a daily basis. Perhaps maybe on a monthly basis or a quarterly basis it's suggestible, but definitely at the end of the year at least. So if you have not done so far, then at the end of the year you have to sit and you have to start reconciliation. Now talking about why this reconciliation becomes important is, gone are those days where if the business says that okay, let me do 44 AD and just declare presumptive income, that is all right, because you are telling the government that you're not maintaining the books and the government is not going to come after you. But now if you look into the current scenario what we are in, on a daily basis you raise an invoice. That invoice gets reflected as e-invoice and the government has track of the same. You raise e-way bill, government has track of the same. You file GSTR1, you file GSTR3B, you have GSTR2B, and then from income tax there is TDS, there is 194Q happening for each and every transaction. So more than Zoho Books, even government has a real-time data of the business. So when government already know what business that we are doing in the past olden days, probably 10-15 years, there was a larger scope that was left with an accountant to alter certain things, to increase the sale, decrease the sale, for whatever reason. Let us not get into those reasons, increasing the sale, decreasing the sales, post year-end adjustments. But now, because of the day-to-day reporting that happens with the government on a daily basis, the scope is much lesser. And you cannot risk that in GST your figures are different and in your books it is different. So there are certain things that we need to keep in our mind when we start doing year-end accounting. And to do that, I'd request KP sir your permission to share my screen so that I can take you through my presentation. Right. So couple of things first before we start our year-end process, because for all the participants, please note that this is a 3-part series. I'll be covering the first part series on where I'll be talking about what are the initial things that you need to take care of. And I'll be joined by another co-trainer, that is Jigar Shah, who will be talking about how do you close your tax-related entries, how do you close GST and your income tax-related entries. And finally, we are joined by an excellent speaker, Nilima ji, who will be talking on reports and analytics. So this is a 3-part series, so don't miss on those sessions as well. Now, see, to get started with, this is typically how our books look like. Okay, this is a messed up kitchen that you see. We say that on a daily basis I record my sales, I record my purchases, but the problem is it is a different software that what we are going to use. And if you don't actually understand how the software functions, this is typically how your books are going to look at the end of the year. Though you're honest, though you're doing everything on a daily basis. I'll give a very simple example why this will happen. Let me just give you an insight on normally whenever I look into Zoho Books, whenever I come to items tab. Okay, now if you can see the items tab that I have. Okay, now KP sir, the screen is visible, right? The Zoho's book screen.
Yes, it is visible.
It is visible. All right. Now, this is an item. And now if we see that, let us say that I'm a dealer in construction related materials. So there is a copper wire. All right. That is an item. The rent that I pay. Now, is it an item? It is not an item. Okay. Laptop, which is my fixed asset. It is not an item. That has to come in a very different place. Steel and cement, these are my items. Now, the Zoho Books fundamentally works on 2 aspects. The first one is there is a transaction related voucher. Second one is there is journal voucher. The transaction vouchers, like your sales, your purchases, your expenses, your bills, are transaction vouchers. Then we have journal vouchers. And when I talk about journal vouchers, the people who have been doing their accounting in Excel or any other softwares, those softwares allow you to pass any kind of an entry. For example, let me give an entry and you tell me, is this entry correct or wrong? Now, if I were to pass an entry called as depreciation account debited to account receivable. Now, is this account correct? Now, let us say that, I was supposed to receive 1 lakh rupees from my customer. and he says that he'll only pay me 70,000 rupees. So 30,000 is technically bad debts. So the entry should have been bad debts. I should have debited, and I should have given credit to account receivable. But instead of doing this, I am saying depreciation account debited 30,000 to account receivable 30,000. See, fundamentally, this accounting is wrong, but the software will not point it out because it meets the requirement of double entry concept. There is a debit and then there is a credit. But in Zoho, this is not permissible. What Zoho does is it differentiates these two aspects. There are three masters. There are three masters that you need to remember. There is an item master in which you record all the items that you deal with, your purchases, your sales. It could be of goods or services. That is one thing. Second one is there is a customer master. The customer requires no explanation to whom you sell your products. Okay, it could be goods or services. Third one is there is a vendor master from whom you purchase. You purchase items or assets. These three masters. Now you cannot touch these three masters using your journal. So I cannot pass an entry called as depreciation account debited to account receivable in Zoho Books. Because if you come to your accountants tab here, and if you go on clicking manual journals and you say create a new journal, here account, these three masters will not come as account here. So inventory items will not come here. Your individual inventory items will not come here. Your customers will not come here. Your vendors will not come here. So any of these adjustments for you to do, you have to do it only in your sales module or under your purchases module. Now, this is a larger frustration that people normally face. I'll give one simple example also, because if as an accountant, sometimes we request for a more flexibility. Okay. Now there could be a possibility. Let us say that there is a hotel situated right next to a grocery store. So the hotel purchases items from the grocery store on a daily basis, and also occasionally even the hotel supplies food to the grocery store. So for the hotel, if hotel is your client, hotel has to receive some money from the grocery store, and hotel also has to pay some money to the grocery store, and you would want to adjust them. Okay, normally if you are doing accounting through Excel or different legacy accounting softwares, it allows you to pass that entry, accounts payable, account debited to account receivable. You can set it off and the balance will become zero. But in Zoho Books, you cannot do that. Now the question is, when I say you cannot do that, I am not saying that this is not a commercial possibility at all. We understand it's a commercial possibility. Now, how do you do that? Okay. Now in Zoho, whenever you go to your accountant under chart of accounts, whenever you click on new button, there is an account type called as payment clearing account. Now this, you need to be very, very comfortable in using this clearing account. Okay. Now let us say that I create one account, and I may name it as adjustment account, whatever. Okay. Now if I create this particular account, this will act as a temporary bank account. Okay. Think of this as a temporary bank account, not real bank account, a temporary bank account. From here I can route the transaction. Okay. So instead of just calling the entry as accounts payable account debited to accounts receivable, I have to do it as accounts payable to payment clearing account and payment clearing account debited to account receivable account. Okay. So this is the way around. So this is something that you need to get used yourself to. Now, having said that, let us start with the procedures. So first thing first is, I want you to go to your items and see whether these items are actually items, because most of the times you would have entered your asset values here. Because if you are going to enter the asset values here, you cannot charge depreciation on the same. Assets should form part of your chart of accounts separately. Only items that you purchase and you sell, those should go and sit under your items. Same goes with the customers and vendors. Okay. Next one is, let us take a contextual example. Okay. As we were discussing initially, we had old way of cooking, then semi-modern way of cooking and the modern way of cooking. At the end goal is we need something to eat, something delicious. The goal remains even the same even in today's era. But the methods were absolutely different in the olden days, where you had to go, get the firewood, all those things. Then when we had gas, then it is much easier to start cooking. But now when we have air fryer, oven, and so, it is comparatively more easier. But only thing that the difference is that the things that worked in the past may not work now. Okay, maybe you could have used steel while cooking, in olden ways. But now when you have to keep something in the oven, not possible. So you please don't fight it. Please don't fight it. Let us learn the new system, because we ask you to do 5 or 10 percentage of adjustment from the old way of accounting, but the larger benefit that what you're going to get is substantially huge. Now, having said that, what are the initial things that you need to have with you even before you sit for your finalization? Is first thing, okay, if you are an accountant and if client appoints you, okay, you have to be very careful at this point of time. Now, if you are an accountant, then let the client add you as accountant. Okay, there is an option of inviting the user and inviting the accountant. Let the client invite you as an accountant. That is option number one. But if you are working for a chartered accountant office, and if the client asks you some help, okay, if they ask you to calculate depreciation, if they say that, okay, we need this help in inventory valuation and all, please don't ask them to invite your official email ID. Okay, if you want to help, I understand that. Create a temporary email ID, and in that email ID, you have access to the client's portal. Don't directly take client's login credentials and you log in through that. Ask them to create a different user. And if you're a chartered accountant, don't log in from your official login, because then it will be a professional ethics violation. Create a temporary ID if you want to help your client as far as computing certain inventory valuation things or depreciation related aspects. That is, first thing is you need to have your Zoho Books credentials. Second thing that you need to have is your bank statements, regular bank statements, as well as your credit card statements with you. These are the second thing. Third thing is you need to have balance confirmation from debtors as well as creditors. Now, as how your debtors and creditors, they will give you statements, you yourself can generate your statements as well. For example, if you want to generate a statement, you just have to go to respective customers. Let us say that, I go to my sales, and if I go to my customers, and let us say there is a customer called as Mr. B. Now there is an option for me to generate the statement at the end. There is this particular statement, and you can say that if you want to generate for the previous year, so there is a statement that gets generated. Now you can directly email right within the software only. This is where, I told you that software adds certain values to your day-to-day accounting. You don't have to download and again send it. You can directly send it from here. Or if you want to, send from your other email, then you can download as a PDF copy, and then you can send it to your customer or that of vendor. That is as far as balance confirmation. Now coming back to the presentation. Okay. Yes. So next aspect is you need to have GST report. Okay. Now GST report, when I say, I ask you to download everything that is in the portal. Okay. You need to have all the GSTR1s, all the GSTR3B, details of all the e-way bills that you've generated, all the GSTR2B, and you need to start your reconciliation, because in today's era, finalization is 90% is reconciliation and 10% adjustment. Okay. For you to reconcile, one, reconcile with the bank. Second, reconcile with your debtors and creditors. Third, most importantly, reconcile with the GST. Okay, because if there is a difference between your books as well as GST, of course there is going to be difference for so many reasons. Keep the workings ready now only, so that it is going to be much easier at the year end when you are going to file annual report of GST. You exactly know why you did certain adjustments in your books that is not clearly reflected in your GST. Okay, so you will have GSTR2B and your outward supply details. That is one thing that you need to have. And if possible, use third-party tools to, generate a summary of the same. Next is TDS statements. I understand that for the Q4, your TDS statements may not be ready. However, by the first week of June, it is going to be ready. So download from your portal, download from 26AS, from AAS, TIS. Now, once you have all these documents ready, let us start reconciling. But now, see, if you were to start cooking, you should not go with the presumption that your kitchen is already clean and you start cooking. This is what we think our books are. But more often than not, your books, the opening balance itself are, not, clear. So what I suggest, even before you start doing current year's adjustment, go back to your Zoho Books. Okay. Now, if this is my Zoho Books, I presume that this is the business that you are running from many years. So the last year you have an audited financials. Now let us say that, this is the audited financials that I have. Have that audited financials in your hand. Then come to the reports module here. Then in the reports module, you come to the balance sheet. For the easier purpose, let us say that, you come to horizontal balance sheet. Okay. Now once you come here, then you say custom and you generate, okay, as on last year, that is 31st March 2024, and you click on done and you just run the report. Okay. And whatever comes here, okay, should be exactly there in your financial statements. If it is not there, no matter what you do, your books are not going to be clean. Once you have done that exercise, okay, and again, I want you to generate as on 1st of April 2024 and run the report. Okay. Now, the balance here should match with that of your financial statements. But now, if in our example, if you see that there is a mismatch, there is an opening balance adjustments of 10,000 rupees that we see here. That means there is, you have missed on entering some opening balance of an account. Now, in Zoho Books, the opening balance are automatically carried from last year to current year. Okay, so it is not like different accounting softwares where every year, you split the old year data and put new data in the new year. Your old year data automatically gets carried forward. But if while finalization, if your chartered accountant has done some changes there and it is not properly reflected here, you will see some opening balance adjustments. So even before you start doing current year adjustment, you have to fix this. Check each and every item of your balance sheet and see where is this 10,000 rupees missing. Now, if you feel that in one of the inventory, okay, there is actually a balance of 10,000 rupees, it is not been shown here, then you have to go back to that particular inventory. Okay, now let me go back here, and whatever the item that you find, now let us say that I come here, then I'll have to click on edit, and here I'll have to put the balance. Okay, let me say that inventory tracking. 1 second. Okay, items. Okay, there is inventory tracking and it has been enabled from 1/4/2024. So from opening only it has been tracked. So I'll say okay. Let me come back to my inventories items. I will say okay. The value was around 10,000. Okay, opening stock. We'll say 1,000 and it's a quantity and rate per unit. Okay. Now I'll just go and hit save. Okay. Now you have to do these kind of changes in the opening balance for your books to match. Okay. Right. Now there is 10 that is missing. 1 second. Okay. All right. Now this is the initial opening changes that you need to do. Now that is the first thing first. Now let me come back to the presentation. So once you have done all the opening balance reconciliation, what is the next reconciliation that you need to do? The first reconciliation that you need to do is in terms of your bank reconciliation. Now, when I say bank reconciliation, Zoho treats both your bank statements as well as credit card one and the same. And the people who are used to using Zoho Books, they understand that Zoho Books has an option. So under the banking module, if you come, all the bank accounts that you open, okay, are under here, and even all the payment clearing accounts that whatever you open. I asked you at that time if you want to set off your debtors and creditors. Okay, you open a payment clearing account, that account also will come here. Now, primarily, one thing that I want you to understand is this. Even before doing bank reconciliation, normally, as a traditional accountants, we have this policy. Now, let us say that there is a rent payment that I make. And let us say that, my rent payment is some 30,000 rupees. Now, what is entry that I pass? Now, if I'm giving a check of SBI, my entry is going to be rent account debited to SBI, okay, bank SBI. But let us say that that party has not deposited that amount for 1 month or 2 months. Normally, in our traditional way, we do this in reconciliation. But in Zoho Books, I strongly advise you that don't pass that entry unless that person clears that check. Always your go-to entry should be rent account debited to undeposited funds. Okay, so this particular account should get credited whenever you issue the check. So whenever you make these payments recorded, whenever you give a check and you say that payments made, okay, and whenever you do this payments made and for whatever vendor, okay, here paid through, okay, you have to click through undeposited funds. You should not do SBI. Okay, it simplifies your reconciliation process, and you actually have a track on what is the number of checks that are issued and which are not cleared, or what is the number of checks that you've received and which is not cleared yet. Okay, that is something that we have to keep in mind. Now, once that is done, you go back to your banking module. Okay, now in banking module, let us say that I open my SBI. Now, for all the people who have used Zoho Books, they're already clear. But if you're new, you must understand that in Zoho Books, these are two different parts that you see. There is one part that you see one uncategorized transaction from bank statement, and next you see all transactions. Now, the one uncategorized transaction, what you see on the screen, this is not your financial books. This is a copy of the passbook. Okay, just because the transaction is here, it does not mean that it is there in your books of accounts. If I generate my reports, if I generate my P&L account, if I generate my balance sheet, this entry is not recorded in my books of accounts. Now, on the right next, you have all transactions in Zoho Books. Now, these are the transactions that has been recorded in your books of accounts. So when I talk about reconciliation, I am talking about here, there must be 0 uncategorized transactions. Now, if it means there is a one uncategorized transaction, it simply means that there is one receipt or one payment that is appearing in my passbook, but the same is not appearing in my accounting book. So before you start your finalization, you should always see to it that the categorized transaction should be 0. Okay, so uncategorized transaction should be 0. Everything should be categorized. That is one thing. Second aspect is categorization itself is not enough. The timing is also absolutely important. For example, in your books, you have said that the payment is made in the month of March. Okay, if you have told the payment is made in the month of March, but here in the passbook it shows that the payment is made in the month of April. There is a mismatch. Okay, and you cannot change what is there in passbook. You cannot say that bank passbook is wrong. What is wrong is your accounting book is wrong. Instead of recording it as undeposited funds, you have recorded as if the money has left your bank account in the month of March itself. So before you start reconciliation, if you see that periods are different, in your passbook it is coming in the next reporting period, but you are in your books it is coming in the previous reporting period, what you are supposed to do is go back to your books, change the dates. Okay, so that is how you are supposed to start recording these transactions. Once it is 0 uncategorized transactions, then you can start reconciliation, because if there is uncategorized transaction here, please don't start reconciliation. It will not reconcile. That is one thing. Second thing, a practical point of view is there are 2 ways of importing transaction into Zoho Books. That is very, very popular ways. The first way of pulling the data into Zoho Books is manually you download something from the bank statements and you upload into that of Zoho Books. Now, this may not be on a real-time basis, but this is one of the safest way, because none of the transactions will be missed. Out of 100 transactions, all the 100 transactions will be imported. Now, sometimes if you choose to go with the partner banks or connected banking, where you link your bank statements with that of your Zoho Books, so automatically there is a withdrawal or a deposit, your bank sends the information to that of Zoho Books. You use the service, middleman services like Yodlee and other players. Sometimes, occasionally, may not be every day, but probably out of 365 days, maybe for 1 or 2 days, some transaction will be broken, some transaction will come twice, or some transaction will not come at all. So even before you start reconciling it, before reconciling in the software, just first see whether the closing balance matches. If it does not match, that means that there are some transactions that are not properly imported. So you have to re-import those transactions. That is something that as an accountant that you have to be careful about. Okay, so the system is there to simplify, but don't 100% depend on the system and blame the system. As an accountant, it is your role to see that whether everything is properly imported or not. Now, once it is imported, everything is done, then you will go ahead with reconciling the transactions. Okay, sometimes it may also happen that once you reconcile it, then you will not be able to change anything as far as banking is concerned. You have to again unreconcile and do all those things. So before you start reconciling it, see, because if you have put, many of the times I've seen people putting transaction rules. Okay, and because you have not clearly defined those transaction rules, for example, let me give an example. Normally, you would have given a transaction rule saying that whenever in the passbook, whenever in the bank statement, you see the word Zomato, whenever you see the word Zomato, or whenever you see the word Swiggy, let it go as meals and refreshment, because that is your understanding that whenever you see the word Swiggy, let it go for meals and refreshment. So every time the software does the same thing. It does not use its own intelligence. It depends on you. Now, let us say that, one day you ordered from Swiggy Instamart. Okay, you're not ordering some food to eat, but some mouse that you ordered from Swiggy Instamart. because you have defined the rules, automatically even that will also go and sit in your meals and refreshment. So an accountant, you need to sit and verify each and every entry. Don't just go on the base of formula, and you have to first check, or else auditor will come at the time of audit and he will point it out. Before he does it, you only do it. It is better. Okay, that is one thing. Now, if while importing you have made some mistake, there is an option for you to undo the last import as well, and you're supposed to start reconciling it. Okay, now this is where you say that, start date from whatever date. Okay, now for the whole of the year, if you're not done reconciliation, then you will start from 1st of April, and end date you will say that end reconciliation will be up to 31st of March, and you will put the closing balance. Okay, now let us put a dummy amount and I will start reconciling. Okay, now this is how if both are matching, okay, you will start on going on ticking. Okay, if the transactions are already matched, now in Zoho Books there are different terminologies that we use. Okay, now you need to be familiar with these things. It may not be there in other accounting softwares. Okay, the one of the thing that you need to be mindful is in Zoho Books we use the word, there is, if in Zoho Books, if you see something called as manually added, that means you have directly added this transaction to your accounting software and you have made no effort to match it with that of passbook. So it should never be manually added. Okay, you add it manually. Once you add it manually, what you need to do is you need to either categorize it or you need to match it. Okay, now what is the difference between categorization and matching? Okay, there is no logic behind these words. Okay, just remember this. Categorization is basically, if this is a lazy way of accounting, that is categorization. That is, you only look at the passbook. Okay, you look at the passbook, and if there is 600 rupees payment, and you will say, okay, this payment is, this is some kind of an expense, and you will say, okay, this is related to, let us say, advertisement. This is 600 rupees. Okay, and I will not select any vendor, and I will say just save. Okay, now this 600 will come and sit here because now it is 0 uncategorized. Okay, now what is categorized? Categorized basically means you have seen the passbook and then you had a eureka moment saying that, oh, this is not recorded, then you record it. That is categorization. Now what is matching? Matching means you have already done your part of accounting. Okay, you have made some payment, you have recorded in your books, then that comes in your passbook. Then you will say, hey, this transaction, that's the same. Then you do this. This is matching. Okay, now as far as your accounting is concerned, will it change if it is categorized or matched? No, both results in the same effect. But categorization is where it comes first in the passbook, then you record directly from the passbook. That is categorization. Whereas matching is you record in your books first, then you compare it with the bank statement and you say that these transactions are same. Whether it is matching, whether it is categorization, just see to it that all the transaction either has a classification called as categorized or matched. There should not be anything called as manually added, because if this is manually added, then in the reconciliation, this transaction will not be reconciled. Okay, so before you click on reconcile here, okay, these transactions should be either categorized or matched. Okay, I hope that part is clear. And remember, reporting time period is absolutely important. It has to be in the same time period, both in the bank statement and as well as your own books. It must be from 1st of April and 31st of March 2025. That is as far as bank statement is concerned, and the credit card also happens the same way. KPN sir, at this point, do you have any questions?
No, would you mind? There are some questions from the audience. So I will probably read it out.
Okay.
Okay. I'm just reading it out, and you can probably answer that. So one question is from Sharath. So the question is, how do we account cess deductions in receipt if we want to account the deduction in one entry in receipt voucher?
Which
You
deduction?
want me to repeat it again? How do we account cess deductions in receipt?
Just 1 second. I'll just.
We want to account the deduction in one early in receipt voucher, one entry in receipt voucher.
Okay, just 1 second, sir. Record cess deduction in receipt.
You can go to questions tab.
Okay, can you, because that question, let him give one proper scenario as to what cess that is talking about, under which law that cess needs to be deducted. Is he referring to TDS? I don't know which, TDS is not a cess. So please be little more specific. I'll come back to with the answer.
Okay, Sharath, actually, you can throw the question, tweak a little bit according to what Anvesh was asking you, and just text here, and we will come back to you on that. And the second question is from Mary Sophia. Is Zoho Books integrated with DBS Bank, as I am not able to fetch bank statement directly?
That is something for the probably, we have to check. I
Yes,
don't know.
yes,
Yeah,
yes,
it is
yes.
available.
It is available.
Yeah, the product team is showcasing on a demo and they'll showcase it.
Okay, okay. So then one more question from Amit Jain. It is again relating to Zoho Books only. So in Zoho, how how to book provisions of expense and deduct TDS on that particular expense, and later adjust with provisions transaction. Let me repeat it again, Anvesh. In Zoho, how to book provision of expense and deduct TDS on that particular expense, and later adjust with provision transaction.
I got the question, sir. I'll come to that. This is at the end of the session, and that's actually very intricate procedure in Zoho Books. I'll come to that. Okay. Now,
Okay, okay,
so the
okay.
first thing that we are supposed to do is from the point of view of bank statements. Now, once bank statement is done, the step number 2 for us to go is inventory. Now, if you remember the initial part where we discussed about inventory is a separate master. So if you want to increase the value of inventory, if you want to decrease the value of inventory, you cannot do it with the help of journal voucher. Okay. Normally in other softwares, one single entry in journal voucher and the inventory value will start moving here and there. So in Zoho Books, if you want to increase or decrease the inventory, the only way to do that is you come to your inventory items, and there is an option called as inventory adjustments. Now in inventory adjustments, you will have the two types of inventory adjustments for you to do. Now, one second. Inventories items. Okay, let me just purchase certain stocks. Now, let us say bills. Okay. Now, one thing that people must be mindful is of the fact that there is an option called as inventory tracking under items. Now, why this is crucial is if in items, if this option is not enabled, that is enable inventory tracking, the software will presume that all the inventory that you purchase is consumed by the organization. So at the end of the day, there is no stock that is left. Okay. So it is thinking from a point of view of a hotel, which is purchasing grocery or vegetables. By default, this option is not available, never enabled in Zoho. So if there are inventories that you want to track, whenever we say inventory tracking, basically means you have opening stock and closing stock in your trading account. If that is there, then you need to you need to enable this option called as enable inventory tracking. That means you are telling that for certain goods, I need to keep a track of what is the quantity of purchase and what is the quantity of sale. That is first thing. Second aspect is by default, even this option is not enabled. That is track landed cost on items. Now, landed cost, sometimes we call it as direct cost. And in AS2 or in AS2, whenever we study, we say that whenever I purchase an inventory, it is not only, now let us say that, I purchase, I'm an electronic dealer and I purchase mobile phones, 100 mobile phones, and each mobile phone I pay 1000 rupees. So my purchase cost, the bill will read as 1 lakh rupees. But this alone is not the cost of my inventory. The phone, for that to come from a vendor's place to that of my place, I would have spent another 5000 rupees as transport. Now this 5000 rupees also should be added to my purchase value. Now this is called as landed cost. Now, unless you enable this landed cost, that 5000 rupees will go sit in your P&L account. You don't want it in P&L account. You wanted to add it back to the cost of inventory. Now, only once you enable this, the option of apportioning the landed cost will be available to you. Okay, that is one thing that you have to remember. Now, once it is done, let me just save this. Next is, as far as inventory adjustments are concerned, let me go ahead and make one purchase. So there is an item that I have created. Let us say that there is an item that I created is a new item. Let me create. Let us say, okay, some steel wire. Okay. And I will say it is in terms of pieces, sales information, 1000, purchase is some 750. Okay. Now, here, when you created an item, okay, whatever you have given, by default, that, whenever you sell this particular item, your sales will get hit. And whenever you purchase such item, your cost of goods sold will be hit. Okay. Now here I have to enable this. Though by default I've enabled it, it does not mean that for every stock the inventory is going to be tracked. So let me click on that option, and I will say, let me click under this inventory asset and valuation. Zoho earlier till last year it was only having FIFO. Now it also has weighted average cost of inventory valuation, opening stock nothing, and I will say this is the item, that is steel wire. Now let me go ahead and make one purchase. I'll come to my purchases and I will say bill new, and here let me say I'm purchasing from Mr. C. Bill number I'll put it, and purchase date I'll put it as 1st of May. I have purchased that item. And here in item details, most of the times I've seen people, instead of creating item, they create as an account. Now, if you create as an account, you will not be able to do inventory adjustments. You have to create under here. Now there is this item that I've created, that is steel wire. Let me purchase that item. Let me say I'm purchasing 50 units for 1,000 rupees each. Okay, so it is going to be 50,000. And let me just save it as open. Now this is the item that I have purchased. Okay. Now when I come to my inventory adjustments, period. Okay. This year, all 1 second. Okay. Just give me a moment. Now, previous year, I run the report. Inventory asset. Okay. The inventory that I purchased will come and sit here. Okay. Now, items, adjustment. Okay. Now, if I want to do an adjustment, now let us say just while I'm doing the year-end stock count, let us say that some amount of stock is missing. Then I have two options, either to do a quantity adjustments or a value adjustment. Now, quantity adjustment means that instead of initially I was supposed to have 100 units of the same. Now let us say when I'm actually counting it is only 80 units. So the 20 unit has gone down. That means by default, if the 20 units go down, the corresponding value also will go down. That is quantity adjustment. Whereas value adjustment simply means that I still have 100 units that is left with me. The quantity is still there, but because of the fall in the market value, I want to do the value adjustment depending on your circumstances. Let us say that I want to do quantity adjustment. Then I'm supposed to give reference as to which account I want it to be hit and reason why I want to do that. I may say that the stolen goods are stolen or whatever. Then here I'm supposed to give that this is steel wire, that is an item, and out of 50, what is the net stock that I have in my hand? Let us say it is only 40. Okay, so that means 10 has gone down. Okay, now you don't have to put the value, because value will be decided by the system based on the system of your accounting, whether it is FIFO or weighted average. Okay, then you will say that convert to adjusted. Now this is the only way how you can actually do the stock adjustment, and it can't be done through general voucher. I hope you are clear. Now remember, there are two ways. One is value and one is the quantity. Value is only when there is fall in the market value, whereas quantity is when the stock either is increased or decreased. Okay, that is as far as inventory is concerned. Now let us go to the next aspect of balance confirmation. Now balance confirmation, see, Zoho offers you an additional facility of vendor and customer portal. Okay, now you have to take the help of the same. So because one way to do that is I showed you go to the respective customer or vendor, download the statement and email it from the software or download it as PDF. Alternative way is you enable the vendor portal. So while you are creating the customer only, the better aspect is that you come here, and when you are creating a customer, now let us say Mr. A is the customer, you edit it, and in here you give them the portal access. Okay, now for example, let me create a new customer and show. Okay, now you come here, there is a portal access that you can enable. Now if you have enabled the portal access, what happens is your customer, you don't have to send anything to the customer. Okay, directly your customer can come to the software and they can check the balance whether it is proper or not. If they've not done it, so you can either automate it in automation, or best way to do that would be you download the statement and send it to them. Okay, that is another way out. Now sometimes so happens, okay, practically what happens is some of the debit notes and credit notes that are issued by your customers or vendors would not be recorded here. Okay, as and when they give it, go ahead and record those transactions, or you can raise the dispute as far as your reconciliations are concerned. Now next one is
just a question on reconciliation, Anvil.
Yes.
See, the hierarchy of credibility in balance confirmation is always interesting. See, for example, a company will accept a casual email confirmation from a 50 lakh debtor, but demand notarized documentation for 5,000 rupees expense. So how do you calibrate confirmation requirement proportionate to actual risk?
Uh, See, that is a very interesting way of asking. See, normally what happens is if you look into the audit report also, the initial part, the auditor will say that management is responsible for preparing the books. And it is a management's assertion on which we are going to express our opinion. So auditors are not going to go after each and every customer balance and each and every vendor balance. Maybe they would insist on external confirmation. However, based on the materiality, and your organization should have a policy saying that, okay, if it is beyond 20,000 rupees of the outstanding balance, then mandatory confirmation that what we will take, depending on the size of the organization. If you're a turnover of 500,000 crore rupees turnover company, you may not even feel that 20,000 is relevant. But, depending on the size of the organization, you need to keep your documentation ready. Now, having access to portal, that itself, the very fact that the vendor portal and the customer portal is enabled will give a larger confidence to the auditor, saying that, okay, now this is not only a figure that is cooked by the businessman, there is a
Yes.
two-way communication that is happening. And as much as possible, if the acceptance happens in the customer portal there itself rather than email, now that acts as a record, which is, that can be used as an audit evidence as well, where the other party has accepted in the portal itself that this balance is correct.
Yes. Probably that is one the feature that every Zoho book user is enjoying.
The portal access. Now, yes, portal
Yes.
access allows you to talk about estimates, sale order, invoices, but more importantly, that we need to use it for balance confirmation feature, because in portal access only they can download their statements. But we should also ask them, because there is an option to comment in the portal. So if they comment there itself, that acts as a conclusive audit evidence saying that other person has also have accepted this particular balance as far as debtor and creditor is concerned.
Super. Anvesh, I am coming back to Sharat's question. So his question is, he is talking about a labor cess deducted by a client who is outside his state of origin. For example, if he is in Karnataka, if someone is deducting that labor cess, sitting in Punjab or Haryana or Arunachal Pradesh, so how can it be treated? That's what his question is. Since he cannot utilize the input. How can it be? They have to expense the same also, right?
No, if again, this is, now I believe that he's pointing at something that he wants a field in that of Zoho Books in bill to record, but that bill is not been available. The question is, can we customize a particular field and put it? Now, if I understand that this particular expense is not something that like an ITC, that is not a claimable expenses, then it is better off just to record that cess as a different separate expense, and then record it as a landed cost and add it to the cost of labor itself. But probably that we can connect off the meeting for me to actually understand what is this thing, because if he unmutes and if he asks, it is going to be much better. But because of the paucity of time, I'm going to move ahead. But I'll also keep Jigar informed, because in the taxation related session, probably he'll be able to throw better light on this.
Okay. In fact, there are respecting the time. There are a lot of questions which has come in, so we are also trying to address it through mail, respond to all the queries through mail.
Yes. Now, these are the two things. I have put it in my presentation. However, the Jigar is going to touch on this, that how do you ensure that your GSTR 1, 2B, electronic cash ledger, credit ledger, and 3B speaks the same story as much as your books. Now, please remember that you have to export the balance of your electronic cash ledger in the GST portal. They should exactly match with the books balance as on 31st of March. Electronic credit ledger exactly match with the balance as on 31st of March 2025. Now, if it's not matching, how do you do all these things? What are the checks and balances? That is for the next speaker to take care of. Same happens with that of income tax as well. How do you go on exporting those reports and match? See, sometimes what happens is there will be some income that will get, somebody would have deducted some TDS in 26 AS. Normally, we have a tendency of claiming the entire amount of TDS. Maybe we are reporting that income in the subsequent year. So before you finalize, before you sign the audited financials, just see your 26 years, does it talk about some TDS? Maybe you don't know that income okay, that actually you are supposed to receive in this year. The other party would have deducted TDS. If he has only deducted TDS, have not remitted the balance amount, then at least pass an entry and keep that balance amount as account receivable. Now this is something that Jigar is going to cover in his session. Now coming to the original question, because this is the heart and soul of today's session as to how do we go about recording outstanding expenses, prepaid expense, accrued incomes, and unearned revenue in that of your Zoho books. Now, first thing first is whenever we wanted to record an outstanding expense. Now, let us say that I have one entry called as audit fees to audit fees payable, because that is a provision entry that I'm going to pass on 31st of March 2025. Now, as long as this entry is as simple as this, no difficulty. All that I need to do is I will come to that of my journal under accountant. First, let me see that whether those both accounts exist. Is there audit fees? Okay, there is no account called as audit fees. So let me just create an account. I will say it is an account which will come under my other expenses, and I will call it as audit fees, and I will say save. Okay, so I have created an expense. Then let me also create another account, and I will call it under other current liability. Income expense. Second, assets. Liability. Okay, there is an other current liability that I've created, and I'm calling it as audit fees payable, and I will save this entry. Now I've created both the entries as far as audit fees is concerned. Now, if I were to simply pass an entry saying that 1 lakh is audit fees, the simplest way would have been I will come to manual journals, and here I would simply say that as on, I will go back in time and I will say as on 31st of March 2025, I will simply debit audit fees account. Now let us say that 1 lakh is audit fees. Okay, and then I will say audit fees payable is as 1 lakh rupees. And I will just go on save and publish. Okay, notes. Okay, pay provision for audit fee. Now this is easier. Now I also know that if you are use Zoho, you know that this is what practically happens, because you say that now where is GST in this, where is TDS in this. Okay, now that is where there is a one difficulty that we face is whenever I pass this entry. Now this is only hitting my chart of accounts, it's not hitting any of my masters. Now when I pass this entry audit fees, now let us also create one chartered accountant. Okay, now let us come to my purchases. Let me create a vendor and let me create one CFO. Okay, let us say Aska is a CFO. I will just save this. Now for this particular CFO, there is TDS that needs to be deducted. There is GST component that needs to be recorded. Now, can I, whether this Aska, if I want to record, can it come under my manual journals? It can't. Now, audit fees payable. Now, even if I say under contacts, if I select Aska, that is, I have to pay them. Or here, if I say that, okay, this is audit fees payable to Aska, 1 lakh rupees. And even if I save this here, when I come to my purchases, I go to my vendors, and if I select here in transaction, there is 0. Okay, so that means that liability is not yet recorded. Plus TDS will not be recorded. Now, even if I pass a TDS entry here, now let us say that I pass some kind of a TDS entry here under my accountant, I come under manual journal, I come here, and even if I add one row, okay, for TDS, okay, that is TDS payable, the difficulty is going to be, now let us say this, I'll come here and I'll say audit fees is 1 lakh rupees, audit fees payable, here I will say is 90,000, and TDS payable, I will say 10,000. Now there is no option for me here to select whether it is TDS under 194, C, J, H, nothing. Okay. So even if I select this, okay, TDS payable, when I come to my reports and when I come to my TDS reports, TDS summary, okay, and when I say this is of, just one second, date range of the previous year, and I run the report, it is not going to come here. So remember this. If I want something to come to my TDS report, it cannot come from my journal. GST can come from journal, but income tax cannot come from journal. Okay. So now what is the way around that, I should go about is this. Now, I'm not saying this is the perfect way of going about. Maybe there are other alternatives also, but this is what we follow. Okay. And again, I'm saying that this is one of the methods. There could be 100 methods that you can follow. First thing is, let us not create the journal. Let us just remove the journal entry at all in its entirety. Okay. First is you go ahead and you create a bill. Okay. Now you come here and you will say that vendor is Oscar, and here in the bill number you are supposed to, now this bill number is not there because this is a provisional entry. So you create a nomenclature for all the provisions. Okay. Now if this is the first provisional entry that you're passing, let us say provision entry 001. You are supposed to track it separately in an Excel sheet. This is first provisional entry. Bill date, you put it as on 31st of March. Okay. Now due date, as of now, let it be 31st of March only. But when you actually receive the bill, okay, there due date you put that of the actual bill date. Okay. Now, is it accounting wise it is 100% correct? No. Okay. As a student of accounting, I don't say, but this is a workaround for that particular thing. Now you can come here and you say that your expense is audit fees. Okay. And you will record your audit fees of here 1 lakh rupees. Okay. Then you will, and whatever the GST, TDS that you want to enter, okay, that you can go ahead and you can record it here. Now I will say it is a professional fee. Same way, I have not created as a GST registered vendor. If I say that it is GST, it will all include my GST related information also here. There is no problem with that. Then I'll go ahead and say save as open. Now, the difficulty is this. What is the difficulty in this is, now this particular vendor Aska will come as my sundry creditor, which I know it should not come as my sundry creditor. Okay. Now when I come to my reports, when I come to my horizontal balance sheet, and I will say that of previous year, it will say under accounts payable. Okay. It will say this. Now this is not my accounts payable. So the other alternative for this is same thing. You pass this entry. The second entry should be you come to purchases, and then you say payments made. Okay. And then you make a new payment. You create a new vendor, you select Aska, and here you are supposed to say what is the amount that you are making payment. And here when you are saying paid through, okay, here you are supposed to select audit fees payable. Okay, you say audit fees payable and you say that amount of 90,000 rupees. Okay, done. Now you will say save as paid. It is actually not paid. You are just moving from sundry creditors to that of audit fees payable account. So now if you come to your reports and if you come to your TDS and you keep on TDS summary, now one is 194J, 10,000 is tracked. That is one part that is properly done. Now second part is when you come to your reports, when you go to your horizontal balance sheet as on the previous year. Now if you see there is okay, this is previous year. No, 1 second. Just one date mistake has happened. Just 1 second. Payments made. Yes. This payment made date has to be that of, you are passing it on 31st of March 2025. Save. Okay. Now if you come to reports, balance sheet. Okay, so now it will show it as audit fees payable of 90,000 rupees. Now, this is how you need to, there is a workaround, but there are 1 or 2 pain points that is there. I don't disagree with that, but this is how you need to figure the workaround. Now, when you actually receive the bill, should you again record the bill? I would say no, don't record that particular bill as it is. Okay, simply pass the JV. At that point of time, you can pass the JV. You have to just debit account audit fees payable to that of bank. Okay, 90,000 rupees. But in the original bill, whatever you have recorded, you can either come back and record the actual bill number. Okay, but date you cannot record the actual date. Okay, that would require another workaround for you to do that. Yes, so that is how you go about recording your outstanding expenses. So that is the difficult part, outstanding expenses. Rest of the things are much easier. That is prepaid expenses. You can route it through journal voucher. Now let us say that you have recorded a rent of 2 lakh rupees. You have paid for March and April together. You have booked as rent to bank. Okay, or entire 2 lakh rupees. Now you want to just reverse that 1 lakh rupees as prepaid expenses. What you need to do is come to JV. Okay, in journal voucher, both the prepaid expenses also will be available to you, rent also will be available to you for you to access there. So prepaid expenses, there is no difficulty. Now, when we are talking about accrued income, there also no difficulty. You can access it from JV directly. Now, let us say there is an FD as your an asset that you have created. There is 10,000 rupees of interest that you are getting. Now, for you to book this accrued income, you can directly come to JV and you can book it in a manual journal. Okay, you can book it, no problem at all. As far as unearned revenue is concerned, see, in Zoho Books, most of the times one issue that I normally see is whenever you record some money that has come from the customer. Now, for the people who are doing categorization, you have told that the customer has paid 1 lakh rupees and you are recording it here. That is, okay, if you directly record the payment in, okay, if you come here and if you directly record payments that is received, okay, this money, okay, now let us say that, we have received this 5,000 rupees from one customer. Okay, this is one of the payment that what we are receiving. What is the date of the payment? That is 13/3. Now let us change that date into that of 13/3, okay, of March only. Now, though Mr. A has paid this amount, now if you go to Mr. A, okay, customer, if I go to Mr. A, now this amount, okay, that 5,000 that I have received, okay, is treated as an advance amount that I have received. It will be tracked in your balance sheet as unearned revenue. Okay, there is an account called as unearned revenue, which will be tracked in your balance sheet. So you have to be very, very careful on that particular thing. So it sits here. There is unearned revenue, that is 50,000 rupees. Now there are two possibilities. Possibility number one is invoice is not issued. Okay. Now if invoice is not issued and you don't want to issue the invoice, that is okay. That may be tracked as unearned revenue only. One thing. But let us say invoice is issued, but you have not adjusted it against. So it becomes very important to apply this. Okay. Now, because we know this unearned revenue of 50,000 rupees, okay, there is an opening balance. Now, if there is, even if I record a payment received here, okay, now this particular payment from Mr. A should be applied against, it should be applied against a particular invoice. Okay, now let me just create one invoice, okay, and I'll show you how the application happens. Now let me create a new invoice to a new customer called as Mr. B, okay, or let me create a new customer only. Okay. Let me create a customer called as Damodar is the new customer, and I will just save. This is the new customer that I created. Now let me raise an invoice to Damodar. Okay, I will say from Damodar, invoice number so and so. I will say last year, that is 31st of March. Okay. Stay here. Okay. I will say I have sold some cement worth rupees 9,000. Okay. Now I will say 7 sent, cancel, mark as sent. Now when I do this, an entry is created, a journal is created that Damodar has to pay me 9,000 rupees. This is one aspect. Now let me receive money from Damodar. I will come into my payments received. I will click on new. I will say that Damodar has paid payment of 9,000 rupees. Okay. This is it. Now it is very important that I match it against that invoice number. Okay. Now I will say save. Okay. That invoice number matching is important. Now if I come to this invoices, now it shows as paid. Okay. But if I have not matched it, okay. Now if I have not matched it, here I can delete this particular matching, disassociate and add as credit. Okay, so in this situation, what happens is this 9,000 rupees, though Damodar has paid me, but it is not adjusted against this particular invoice. Okay, so then it will show it as unearned revenue. Okay, so it is important that you first apply that entire amount. Okay, whenever you open a particular invoice, it will show that credit is available of 9,000 rupees. If the customer has already made the payment, you are supposed to click on apply now, and you are supposed to say, okay, let 9,000 be applied against this particular invoice. Only if you do so, it will be adjusted. Okay, so this adjustment is important. Unearned revenue. Okay, now the final thing. Okay, probably in 5 minutes I'll complete, and the last 10 minutes I will be open for the questions as far as depreciation is concerned. See, earlier there was no asset register option in that of Zoho Books. Okay, recently in the last year they've added the option of asset register. Now, what asset register does is it tracks an asset. You can track the serial number of the asset, when did you purchase, if there is a warranty, to what extent the warranty is there. These are the things that you can capture. That is one part of it. Second part of it is you can use that asset register feature to calculate the depreciation. There are two methods of depreciation that is permissible. One is under SLM method and one is under WDV method. Now, how do you enable the fixed asset register option? You go to your settings. Okay, and in general, there is this option called as fixed asset. Okay, in general, there is this option called as fixed asset. You enable that fixed asset, and then when you come back from the settings, okay, you close. Under your accountant module, you will be able to see this fixed asset. Okay, there will be a module for you to record your fixed asset. That is point number one. Now, once you do this, is it that you will go and directly enter your fixed assets here only and nowhere else? No, not like that. First one is you need to have your chart of accounts. Okay, now as of now, in my chart of accounts, in my assets, there are couple of assets, but let me create a new asset. Okay, I will create under fixed asset, and let me create this as computer equipments. Okay, so this is the asset that I'm creating. Okay, and I will say save. Now, once I've created an asset called as computer equipments, I have to go and record this purchase. First, I'm purchasing that asset. No? So let me just go and record the purchase. So I'll come under my purchase module. Okay, and I will come to my bills. And most of the times I've seen people routing their purchases through journal voucher. Not required. You can route it through bills only. So I'll come here and I will select the vendor. Now let us say that purchasing from Mr. D, bill number, random bill number, and let us say I purchase it on okay, 1st of July. Okay, I'm purchasing it from 1st of July 2024. And account here, I will say it as it is a computer equipment that I'm purchasing. And I'm for the value, let us say it is 5 lakh rupees is the value of the asset. Okay, this is the value. So I'm saving and open. So this is one asset that I have purchased. Now, if I go to my balance sheet under my reports, horizontal balance sheet, as on 31/3/2025, you will see computer equipments of 5 lakh rupees. Now I need to charge depreciation on the same. Earlier, I had to use Excel or some third-party tools. Now all that I have to do is I'll come to my accountants module. I'll come to my fixed assets. I will say create a new fixed asset. Okay. Here I will say the fixed asset name. I will here for the purpose of tracking. I can name it as here also. I'll name it as computer equipments only. Okay, maybe some ID that I want to give, anything that I want to give, I can give it here. And purchase value, it was purchased for 5 lakh rupees. Right. All this data I'm supposed to re-enter. Okay, and the purchase date is it will not automatically come from there. You have to do it here. And I will say it is put to use from 1st of July itself for the purpose of depreciation. All these numbers, serial number, current value, these are all the things for you to add. And fixed asset type. Okay, I have to create a new fixed asset type. Here. Equipments. Depreciation method, SLM or WDV, I will say straight line. Depreciation frequency, I will say yearly ones. Asset life, I will say 60 months. This also always has to be in terms of month, not in terms of years. And computation type, I will say non-pro rata. Okay. And or pro rata or non-pro rata. So pro rata basically means if I'm using only for the portion of the year, then so I may say pro rata. If I say non-pro rata, it is going to be equal for all the years. And if accumulated depreciation, where it should go and sit under. Okay, I will say let it go and sit under computer equipments only. Depreciation, whenever I debit, let depreciation expense account be debited. Okay, I will just save this. This is it. Okay, once I do this, depreciation account is computer equipments, depreciation so and so, and I will say save as draft. Okay. Now once this is done, this is the profile that is getting created. It will run if the frequency is monthly charging depreciation, it will run on a monthly basis. Now we have put yearly, so it will only run on at the end of the year. Now I will say mark as active, and I will say yes. Once I have marked it as an active, then your value will change. 5 lakh was a purchase and today's value is 4 lakh 24,000. So you don't have to pass another depreciation entry. Now, if you go to your reports, okay, let me go to my reports. And if I go to my horizontal P&L account, okay, will be, and if I say let it be for the previous year, and if I run this, I should be able to see the depreciation expense of 75,027 rupees. That is calculated by the system. So this is how you calculate depreciation. So see to it that your you make the best use of this fixed asset register. Okay, but there could be, okay, so please be mindful of the fact that don't necessarily put the bill date as the date of purchase, because in the fixed asset register you are supposed to put date of putting to use as the purchase date, because from that date you want to see depreciation being calculated. Okay, so this is basically how do you run your depreciation. Yes, so that is the yes. Now it is time for us to take up the questions. We are facing an issue in Zoho Books. Some past entries seem to have been recorded incorrectly, but the system isn't allowing us to edit the ledger. Even in the case of an opening balance mismatch, we are unable to make correction to the previous entries. Now you just have to, okay, Rohit, is it that your transactions are locked? If it is locked, it will not allow you to make the changes. But if you feel that, so you have to understand, is it a migration related this thing? Okay, so just answer that whether the error what you're facing, is it because of during migration certain things have happened, or is it because of certain things that you entered in Zoho Books and the Zoho Books does not allow you to change? Ideally, it should not happen. There are certain restrictions. For example, if you already created an item and then there are certain transactions that is entered and you want to change the nature of items, software does not allow. It is on case-to-case basis. So there is no general answer that I can give. Probably you can reach out to the help desk. Okay. In some account transactions, running balance is not able to select the customer's report and not available in the report. This reporting point probably in Nilima ji will be able to answer in our session. Okay. It is possible, but possible. Some transactions were uncategorized from KPN sir. I'm taking the liberty of reading the question if that is okay with you. You're on mute, sir.
Absolutely fine, Anvesh.
Yes. So some transactions were uncategorized from 22-23 financial year in our company due to improper accounting. Now, if I need to close the books for current year, should we reconcile and categorize from 22-23 onwards? The best practice is yes, you start reconciling from there. Okay, that is how you are supposed to do it. Because in Zoho Books there is no concept of breaking down the year, because in accounting normally if it is a desktop specific accounting software, you have the data, you can split up the data. You can say that this is the data for year 1, split year 2, split year 3. Normally we split it because the data is huge, and if the data is huge, when you're working the system gets slower. Now in this case, because Zoho being a cloud software, the Zoho is doing the task of maintaining the data. So so there is no concept of splitting the year. So if there is an uncategorized transaction in the last year, that means some or the other way it is going to affect your current year entries. So as a golden rule, you should always start reconciliation from the beginning, because you cannot only start reconciliation in the current year. Is there any way to check the TDS deduction compliance from expenses for disallowance purpose instead of opening each and every bill? No, you can generate a report. See, this is again, now it depends on what kind of a disallowance that you're looking at. Are you looking at disallowance from, okay, there were certain payments that you have made, but TDS is not deducted. So if you're looking from that point of view, you can generate certain reports. And from your expenses, you can export certain things. From bills, you can export. But because TDS is a different law, it is very difficult for a report to give that figure. You have to check each and everything to first determine whether TDS is applicable for the transaction. Okay, so a ready-made report may not be available in the software. Okay. So even if you don't consider the cost of delivery in the items, how would it make a difference, since it will be considered as direct cost anyways? And accordingly, the profit and loss would be taken care of. In case of asset, it makes a difference in case of calculation of gains. But of stock items, how would it make that much? There is a question from Satyanarayan Agarwal. That's a good question, sir. See, why it would make a difference is, now I'll give a very simple example. Let us say that I purchase 100 mobile phones, and to get this 100 mobile phones, I pay 10,000 rupees as delivery cost. Now, let us say, okay, I've started my business in the month of March. So my purchase cost of the phone, okay, let us say 100 phones that I purchased, total 100 phone cost is 5 lakh rupees. Then the transportation cost is 10,000 rupees. Now, if I don't add this 10,000 rupees to this 5 lakh and make it 5 lakh 10, this 10,000 rupees will go to my P&L account of the current year. Now, let us say current year I don't make any sale at all. So the only expense in my P&L account is going to be 10,000 rupees. So my current year profit and loss account will show that I have incurred a loss of 10,000 rupees, which is not correct. There is no loss because a stock of 5 lakh plus 10,000, 5 lakh 10,000 is still sitting with me. So this is a concept from an AS2 point of view. Okay, this is not a question that is directly pertaining to Zoho, but I'm happy that you asked this. If it is a direct expenses which you have incurred to bring the material to a saleable position, that cost has to be added. If you don't add it, then if you don't manage to sell this stock in the current year and the stock goes to the next year, this expense will not go to the next year. It will be expense in the current year. So you have to see to it that it is added as a landed cost so that it travels to the next year. Because landed cost is basically, think of it like your inventory as one human. Landed cost is an expense sitting on the shoulder of the human. If you don't make it to sit on the shoulder of the human, that expense will go to the current year only. It will not go to the next year. Landed cost will allow that expense to move forward to the next year. Okay, next is how to book incentive entry if we make invoice in current year. Again, a very short question. I want you to give the context as to what incentive are we talking about. Are we talking about incentive receivable or incentive payable? Okay, what if we do not record TDS on provision of audit fees? Can we record TDS when actual bill comes? Yes, of course. See, if you don't have that aspect of recording TDS when the provision has been made, because when you look at the provisions of 194J, it requires you to, when you are creating in the books or at the time of payment, whichever is earlier. So the law requires you to deduct TDS at the time of making the provision in your books. Okay. Now, when you delay it later on, that you cannot say that you have not made the provision. So then there will be interest and late fee that will be applicable. To avoid that, we suggest record it on 31st March and pay it in the month of April. So to avoid late fee and interest. We are, but let us say the audit fees is very small and there is no TDS that is applicable. Don't do any of these hassle related things. Just pass that entry in your general voucher saying audit fees to audit fees payable. Okay. Yes. We are facing an issue with I guess Rohit Sharmaji is. We are facing an issue in Zoho Books. Some past entries have not been recorded incorrectly, but the system isn't allowing us to. Even in case of opening balance, please let us know how to resolve this. We are cybersecurity not involving any. Okay. I would suggest to reach out to the Zoho Books team itself because only they can help. If it is some system is not allowing, they'll be able to help it. But if it is some ledger, you have already added some transactions, and now if you want to delete them and the software is not allowing, any Zoho Book expert, you go to the Zoho Books page, you will get a lot of consultants who will be able to help you in this particular regard. Okay. At which rate the depreciation be calculated if you select WDV? If you select WDV, you are also supposed to put the rate. So it is not that the software will calculate the rate for WDV. You are supposed to put the rate WDV. Do you want 15%? If you want according to income tax, then put the same rate that of income tax. It will give the exact same thing that that will appear in your books of accounts, that will appear in your income tax portal also. It is for you to decide, do you want it as per income tax or do you want it as per Companies Act? Because both the depreciation rates are different. But remember, the golden rule is you are supposed to put the rate. The software will not put the rate. Okay. Yes. I feel I've taken all the questions and.
Yes, all the questions are taken care of. Thank you so much, Anveshji.
Thank you very much, Anvesh. Thank you very much for being a part of this. And I think Ash can explain tomorrow and day after tomorrow. We have sessions on the same line on year-end closing only, but on a different topics.
Yes.
So tomorrow 11 o'clock and day after tomorrow 11 o'clock. You can just brief the audience that.
Absolutely. So the thing is, what we. So what we are going to have is actually same thing. Like we will be touching base on GST, then we'll be touching base on other features as well that we completely require for year-end accounting. On top of that, we also have regional sessions as well. Like Anvesh today from 3 p.m. onwards will be doing a regional session on Kannada language as well, where he'll just not be covering the conciliation part. He'll be covering the whole year-end aspect. So if anyone is willing to join, we can join again at 3 p.m. onwards. Rest, we'll keep everything updated on the mail trail. And as Rohit Sharma ji, as you wanted those questions, I think you've replied as well. Whichever questions we can answer, we'll reply it individually on the mail itself. So yeah, that's it from my end. And thanks again, Anvesh.
Yes.
So thank you very much, Anvesh. Thank you for all the participants, and hope the session was great. And when Anvesh is there, it is going to be great only. So thank you very much, Anvesh. And
We'll wind up.
bye-bye then.
Yes. Thank you.
Thank you, everyone. Bye.